Hello and welcome to episode 6 of FinTels with me, your host Andy Duncan, a podcast brought to you by FinLingo.com, home of the online analyst app web tool designed to generate infinite quality questions to help you pass financial analysis exams. Check out our website for more details. On FinTels this morning, 10 days after $300 billion worth of cash in India was declared worthless by Prime Minister Narendra Modi, I'll be speaking to Alasdair Macleod, Head of Research at GoldMoney, about the implications of this extraordinary event, both for India and for the rest of the world. Good morning, Alasdair.
Good morning.
Now, it's very blustery here in Henley-on-Thames, and I have men on my roof fixing my roof as well, so we might get a bit of sounds from that. How's things down in the depths of Devon?
Well, it's blustery here. It has been raining, but the sun is now out, and it's absolutely gorgeous.
Fantastic. I do love going down to Devon and Cornwall, even though I know the two are totally different from each other. Now, to business. On the 8th of November, suddenly out of the blue, Mr. Modi told the Indian people that all their 500 and 1,000 rupee notes were going to be worthless in about 4 hours after his declaration. Now, that's like getting rid of all the notes in England, all the £5 notes, all the £10 notes, and just going down to £1 coins. They're going to get until the end of the year to exchange these, but it's created chaos in India. What's your take on this situation?
I just don't understand why he's done this. Various reasons have been put forward. For example, that the existing notes have been quite easy to forge, and apparently there are lots of forged notes in circulation. Another thing is that there's a huge, great cash economy, and they want to bring that in, sort of out of just sort of unofficial cash and more into something that is recordable. I think that's probably actually what's behind it. I think Modi sort of thinks that India is now becoming a modern economy, therefore we have got to move into recorded transactions. A cash economy is no longer appropriate. That is yesterday. That, I guess, is his motivation, but my goodness, the man is being clumsy and destructive. It is really extraordinary. I mean, I think you sort of pretty well made this point in your introduction, but just imagine, if in America they turned around and said, right, all notes more than $10 are no longer legal tender and cannot be accepted as such. And by the way, we are in the process of producing some new notes, but you're going to have to wait, and we can't tell you how long it's going to be. That's more or less what they have done. It is quite extraordinary. But the effect in India is far worse than in Western economies, because very few people, not very few, but the majority of people don't have bank accounts. Something like a quarter of the population don't even have identity cards. And by the way, if you go to a bank and you try and deposit your worthless notes in exchange for a deposit or in exchange for notes of a smaller denomination, you need an identity card. And it's really hit rural India very, very hard. And I suspect that this problem is going to just get worse and worse and worse in the coming days.
Now, Mr. Modi has said that this isn't a full stop on what he's going to do. I mean, he says it's to remove corruption and various other things, but the way for governments to remove corruption is to get themselves out of society and to reduce the regulations on society, which causes the corruption in the first place. What do you think he's going to do next after this move?
There are signs that the authorities, if I can say that in the wider sense, haven't sort of really thought this through. And some of the blowback, particularly on the farming community, they hadn't anticipated. The result is that they are easing up on the restrictions on the farming community, but my guess is not enough actually to make that much difference. So what we're seeing is, if you like, a thoughtless action, and then we've got the sort of a bit of a blowback, and the authorities, I think, have been taken aback by the extent of that blowback. Where they go from here, I really don't know. I'm sure their longer-term plan, in common with all other central banks, is to do away with cash entirely. And I suspect that behind this, with that as the underlying motive, the Modi government, if you like, have just been very heavy-handed in trying to accelerate that process in India. I also have had on pretty good authority that the Indonesian government, the Indonesian central bank, plans to do away with the rupee within the next 5 years or so. Now, there again, you've got a similar situation. You have got a very large, unbanked, cash-driven society. And if the central bank is going to get to that point where it can, turn everything electronic, it's going to have to force an awful lot of change. And I suspect that there is this unwritten agenda in central banks that they do want to do away with cash generally. And I just wonder whether there's some sort of secret memo gone out from, say, the Bank of International Settlements that this is the plan. I mean, it's the only way I can explain this clumsiness, other than Mr. Modi basically is a jumped-up tea seller or something, who actually knows very little about anything, which I'm continually told by my Indian friends.
Now, we have seen Raghuram Rajan, who was the governor of the Reserve Bank of India. He was replaced in September by Urjit Patel. Now, both men have very deep links to the IMF. In fact, Mr. Rajan has gone now to be the vice chairman of the Bank of International Settlements in Switzerland. So we got fingerprints of globalist manipulation going on here. Why do they want to get rid of cash?
Well, basically, it's all about controlling risk within the banking system. If I can put it quite simply, let's stand back from India and just look at the normal situation, if you like. At the moment, I have a bank account with a major bank. If I get worried about that bank's ability to look after my money or to ensure that I can draw on it at any particular time, then I have the option to take that money out of that bank and put it somewhere else. I can either put it under the bed, which is what banks don't like, or alternatively, I can credit it to another bank. Now, that way, if you credit it all to another bank, then my money remains within the banking system. And all it requires is either the Bank of England or alternatively the banks themselves through the interbank market to correct any imbalances that may occur by this or any other means. So you can see that if I instead of redepositing my funds in another bank, I decide to take out cash, that is the basis of a good old-fashioned run on the bank. And if everybody was to try and cash in their deposits for physical cash, you can see that there would be then a big systemic issue. It is precisely that, I think, that the central banks in their long-term planning, in the wake of the financial crisis, they're trying to prevent us being able to trigger a run on the banks in that sense. I think that's really what it's all about. There is also, of course, the subplot, and that is that by having everything recorded, by ensuring that cash transactions take place as little as possible or are eliminated completely, then you remove money laundering, you remove tax evasion, and all the rest of it. And of course, it's the tax evasion side that the authorities, who are desperate for any tax money they can get hold of, that's the side, I think, that really interests them.
Now, the panopticon state, which wants to survey every single transaction that we do ourselves, they probably like that because they can then tax every single transaction and see every single penny that we're spending. But most people don't want every penny that they're spending being seen by the government. Do you think that people, as the government squeeze harder, do you think people are just going to slip out of their fingers and switch to something else? And if they switch to something else, what kind of alternatives do you think people will have for using government money?
Well, it is actually very, very difficult to find a similar alternative. I mean, if you think about it in the UK here, you can't really go into a shop and try and spend dollars, for example. You can't really pay your tradesmen in euros. I mean, you probably get away with it a little better, more than you would in euros than with dollars. I think what's interesting in this is that I just wonder whether these moves might spur a bit of a move into using gold as money again. And it's really very much with that in mind that gold money is expanding, I think, very rapidly. I mean, we're one of the most successful fintech businesses in the world so far. In something like 18 months, we've got just under 1.3 million customers who are using our facilities to do day-to-day transactions. So that is an alternative. It would be too early to say that would be a widespread alternative for cash in a cashless society. But even that is not really cash in a cashless society, because in order to spend gold, you can't actually, you have to have it, you have to transfer it back into a paper currency in order to spend it. So there is actually no easy answer to this one, Andy. And this is where the governments have got you. But having said that, they are becoming very arrogant about their, if you like, the supposed purchasing power of paper currencies. They are now taking it as a complete given. And as can be seen in India, that is the government view. And I think there is a big risk in all this that people are going to turn around at some stage and say, actually, holding this currency is not a good store of value, particularly if the government can go and change the rules on us.
Yeah, I've been to India quite a number of times, and virtually everything I do there outside of the hotels I go in is a pure cash thing, and they don't like it when you get out a credit card and so on. But aren't the governments going to have a problem? Because if they get us all using smartphones and doing everything electronically, won't something electronic like Bitcoin start to take hold?
Well, Bitcoin has taken hold in certain areas. As I understand it, it's really taken hold in China, and China is really driving the price. That is certainly a danger that people will start moving into cryptocurrencies a lot more. But I think the problem with cryptocurrencies is that it seems to me that every opportunity that the authorities, and here I'm talking particularly about the American authorities, every opportunity they have to close an important element of it down, they will take. And I have no doubt that some of the more spectacular losses that we have seen have been very much at the instigation of the authorities.
Talking about gold, in India we have one of the biggest private collections of gold in the world. Do you think this is related at all to the Indian government trying to get hold of that gold in some way?
So far, we don't see any evidence really of them trying to get hold of the gold, other than sort of attempts to get people to deposit gold in the banks, various attempts by the government to persuade the temples, if you like, to deposit gold in the banks, or to lend it to the government in return for paper currency. I mean, certainly they've been doing that sort of thing, and they got absolutely nowhere on it. They've tried everything. The problem I think you and I have, Andy, is that we understand the situation a lot better than the authorities. I mean, we understand that gold is money. We also understand that the trade deficit, which is something that certainly worries the Indian government, is not as a result of people buying gold, which is the way they look at it, but is actually the result of monetary policies and the Indian government spending more than its income. So, the way they're looking at this, I think, is completely wrong. And that actually makes it quite hard, if you like, to sort of get under their skin and understand what their long-term policies are. They've gone through various phases of trying to ban or tax the acquisition of gold. And there's a new sales tax coming in, which is going to apply a tax of 10%. The problem is that for the jewelry industry, the premium over the international price has been less than 10%. So the only way in which the jewelry industry can make money is basically to find means of not paying the tax. And this basically leads to gold smuggling. And so all their attempts, one thing I don't see is the Indian government ever succeeding in stopping the inflow of gold into India, because the more they struggle to do it, the greater the smuggling is going to be. And this has been the history of the relationship between international gold and India, really since the Gandhis. And I just see India continuing to accumulate gold. The problem we have, if you like, as analysts, is that we can know if it's all smuggled, we can't sort of go to the Reserve Bank of India to try and get the statistics for imports and exports and all the rest of it. We will just have to assume. And I'm afraid that smuggling is going to increase. And I would see India on this sort of move probably getting back up to somewhere between 750 and 1,000 tons a year, most of which won't be recorded.
Now, the timing of this move by Mr. Modi was very, very strange. Do you think it might have anything to do with India joining the Shanghai Cooperation Organisation?
I don't think so. I can't really make that connection. So I think the answer to that is I think unlikely. Let's put it that way.
When they do join the Shanghai Cooperation Organisation with Russia and China, they are going to have to find a much larger amount of gold, because I think that's part of the rules of joining that system. So where do you think the Indian government is going to find all this gold it needs?
Well, this is the interesting thing because, the Bank of International Settlements seems to appoint the governors of the Reserve Bank of India. And I think Rajan was there specifically to try and deflate demand for physical gold. And he's tried various things along with the government, and basically that hasn't worked. He's out. The new guy, I think, has probably got exactly the same problem and probably the same brief from the Bank of International Settlements. The problem that India has, which I think is really what you're alluding to, is that if the Indian government wants to acquire gold, it's actually quite hard for it to do it while there is so much demand, if you like, from its own citizens. And all the moves that the Indian government sort of tries to bring about are really to try and remove that conflict. And they've tried to acquire it from their own citizens by offering this scheme or that scheme without any success. So I'm not quite sure where they go from here. But by the way, I don't think there is a sort of a requirement, a sort of a solid requirement for any member of the Shanghai Cooperation Organisation to have a minimum amount of gold. But I think what we do know is that if you join the Shanghai Cooperation Organisation, then you're joining an organisation which at some stage in the future, probably from now on really, is going to look at increasingly at either having settlements in one of the larger currencies within the Shanghai Cooperation Organization, particularly the Chinese yuan, or alternatively, cross-border settlements will probably have an element of gold in it, if you like, on a net basis as much as anything. And India has already been trading with Iran on a net basis, where the settlement is in gold. So this is a feature which I can see becoming greater and greater within the Shanghai Cooperation Organization. And I think it is for that reason that the Indian government feels that if they are going to join them, they will need to have greater reserves of gold. And remember, the last 200 tons they bought from the IMF, I wonder if that's ever been delivered. I would doubt it. I should think it's probably a notional amount sitting in a vault somewhere, which the IMF probably had as a notional amount in the first place, because we really don't have any firm record of the gold reserves of individual central banks. I mean, they tell us what they've got, but we don't have audits or anything. And in most cases, and I think also in the case of the IMF, we don't actually know that the gold is actually there. We need to sort of be able to go and touch it and feel it and say, yes, I can count these bars and they look okay. And it's got a label on it says, hold it for the IMF. So on that basis, I am reassured. We don't get that reassurance. And with the way the gold market works, the physical gold market works with vaulting, with allocated, unallocated accounts, with sight accounts and earmarked accounts in the central banking system. And all the central banks now saying gold reserves, they define it as not just physical gold, but gold and, sort of gold leases, gold to be delivered or whatever. It's not necessarily under their control. So coming back to India, there's a bit of a trail, if you like, of promises, which we can't verify to establish that 200 tons is actually there.
Yeah, so it's probably been rehypothecated 1,000 times anyway. I've always found it very, very strange that the reason governments took over the monopoly of money in the first place was because they said people are adulterating this gold, so we're going to take control of it to make sure your gold is good.
Any excuse.
And now we're moving towards a cashless society, but the central banks are still obsessed with this barbarous relic of gold, which I found very odd. Do you think this could be a move eventually by the Chinese to create a gold-backed yuan?
I do. Now, how that's going to work, I really don't know. I can see that will happen at some stage. It may not happen in the sense that, we could turn up with our yuan at the Central Bank of China, the People's Bank of China, and say, come on, we want kilo bars for this. But I think that is certainly the direction of travel that China is going in. I have it on reasonable authority, anecdotal authority, and on my own analysis that China has considerably greater physical gold reserves than she has declared. It's in various accounts like the Army's account, the Communist Party's account, and all the rest of it. And I suspect that the total amount that the Chinese government controls is in the region of about 20,000 to 30,000 tons. You must bear in mind that the regulations which originally appointed the People's Bank to manage China's gold acquisition program goes back all the way to 1983. So they had a huge, great bear market where they could accumulate gold. They had the early stages of the current century's bull market as well. They have increased their mine productions to the extent that they are by far the largest miner of gold in the world. They also, the state completely owns and controls refining capacity and takes in gold doré from other countries, particularly in Asia, such as Mongolia, to refine, and will keep the bulk of that. And by 2002, it was clear that the government in China felt that they had acquired enough gold to allow their people as individuals to begin to accumulate gold. And that was when the regulations were removed, prohibiting private ownership of gold, and the Shanghai Gold Exchange was established. Now, since then, we don't know the exact scrappage figures, but you're probably looking at the private sector having accumulated a further 13 or 14,000 tons of gold on top of the state's ownership. So you can see that you have the mechanism there which does two things. Firstly, if there is a collapse in the dollar, the Chinese government is protected. And secondly, as China moves away from the dollar and develops its own free trade zone, which will encompass the whole of Asia, which incidentally, it is also causing an enormous industrial revolution over the next 15 to 20 years, as it develops its, if you like, that huge great market for itself, it will have its own completely independent means of money settlement. And that, I think, is where gold comes in, if you like, to give the overall credibility to the currency. Now, whether that currency is today's yuan or a future yuan, we have yet to see. I mean, the reason I raise that is that I do think that there is a big chance that the Western fiat currencies could face a state of complete collapse. If you like, call it a hyperinflation. That's the sort of the more common term. But basically what it is, it's a complete loss of purchasing power as the credibility of these currencies basically disintegrates. In those circumstances, China wants to make sure that she will survive. And you have to remember that all good Marxist economists were taught one thing, and that is that capitalism destroys itself. As far as the Chinese are concerned, they identify that form of capitalism with America and with, if you like, Europe. And on that basis, they think they can control the situation internally so that they are not caught up in that collapse. And they have made sure that they are safe. So I think I'm trying to, it's a bit of a long-winded answer to the point you raised, but I'm trying to give you a context, if you like, for China's macroeconomic policy on a geopolitical level, because it is really looking at gold, I think, as its long-term security. And this is why it has also got its people on side by advertising, even on television, telling them, it doesn't do it so much now, but in the early days, try and get the thing going. It was telling people, go out and buy gold. And also, it is the reason why they have expanded the Shanghai Gold Exchange into international dealing, which gives them, if you like, a degree of international liquidity in the relationship between their currency, the yuan, and the gold price.
Well, it's going to be very interesting then if China does go for a gold currency in the future. Let's get back to India. Just a final question here. If you were, let's say, a business person in India today and you were living there, what advice would you give somebody like that to deal with the next few years under Modi?
Oh, gosh. I don't know. I think they would like someone who could actually come up with an answer to that one. If your business is in India, you're actually trapped. And what you have found is that the government has got an infinite capacity to really screw things up. Most of the time, the government screws things up. Talking to Indian friends, and you'll have found the same, Andy, that when you go to India, you see, the smart cars and all the rest of it. That's the private sector. But if you want to look at the government side of it, it's potholes in the road, government buildings that are falling apart, and all the rest of it. You've actually got this very sharp contrast between what the private sector achieves and government itself. And everybody in India knows it. They understand it. But this must be terribly frustrating if you're a government minister. You sort of think, you're in the position of power and you're powerless because nobody will listen to you. I suppose you could argue, well, we'll take their bloody money away and then they'll listen to me. Perhaps that's what Modi thought. I don't know.
Okay, it's been fantastic talking to you today, Alasdair. Are there any websites where we can pick up your research or find out what you're thinking on the latest things?
Yeah, I publish weekly on GoldMoney.com. And if you go to that site, you'll see that there are three sort of headings on the left-hand side. You've got personal, business, and wealth. If you go under wealth, that is where all the research is. I think that's probably the best place for your listeners to find my stuff.
And do you have a personal website at all?
Yes, I do. financeandeconomics.org.
Thank you very much, Alasdair, for your time today. Really, really good to talk to you.
That was my pleasure, Andy. Thank you.
Here at FinLingo.com, we've built the Analyst app web application to generate infinite questions to help busy people pass tough financial analysis exams like the CFA. With a game-like environment and fully worked solutions, you'll find it's the easiest way to get those financial qualifications you need for your amazing career in finance. Now available on your web browser, your tablet or your smartphone. Just go to FinLingo.com to find out more and to get your free activation link, which gives you completely full access to Analyst app until the end of December 2016. Here on FinTels, we're going to keep exploring the global financial system from a pure free market position to uncover the underlying reality behind the headlines of the mainstream media. If you have any topics you'd like us to cover, just go to FinLingo.com, scroll down and then drop us a line. In the meantime, and until next time, goodbye.